Imagine the power that we would have if we knew what the stock market looked like one day from now. What about 1 week from now? 1 month from now? Heck, even 1 year from now? It definitely does sound like a reach, but what if it was possible? That's what I did. I created an algorithm that predicts close prices of stocks from past data through the use of artificial intelligence and data science. More specifically, an LSTM network, also known as long short term memory. The idea was to take the luck factor out of stock trading and potentially allow for people like myself with little to no knowledge on investments to make large sums of money by letting a machine create our financial decisions for us. LSTM networks are RNNs, or recurrent neural networks, meaning that information gets carried throughout the network. To elaborate, the output of a previous step becomes the input for the next step. This will make a lot of sense soon enough. LSTM models are really good at taking in data in time series format, such as temperature over time or stock closing prices over time, making it ideal for this use case. The issue with RNNs is that they suffer from short-term memory, meaning that they struggle to retain a lot of information. This problem is known as the vanishing gradient problem. When a neural network learns, it uses a concept known as gradient descent. This is essentially a mathematical equation that is made for optimizing certain values within our neural networks, known as weights and biases. Think of it kind of like a ball rolling down a function. The function in this example is known as the cost function. In our example, it refers to how inaccurate our model is. For example, the more inaccurate our model is, the higher our ball is on the function. The more accurate our model is, the lower the ball is on the function. Our objective is to try and minimize this. We do this by changing the equation to reduce the slope of the tangent line on the curve. The only way for our ball to be at the minimum of the function is by working our way to a slope of 0. This is an intuitive approach to really understanding gradient descent, but unfortunately, you really need to know calculus to fully understand the fundamentals of how gradient descent works, such as differentiation, which allows us to take the slope at a given point in a curved equation. The problem with this in a regular RNN is that sometimes our gradients, which is another word for slope, can become so small that our weights don't actually get updated. This means that there's a point where our model might actually stop training. LSTM networks fix this issue by adding a new type of memory to our network, hence the name long short-term memory. LSTM networks are unit-based networks, meaning that they have a single unit that repeats over and over and over again until the end of our network, which is why we're able to pass information from the start of the network to the end of the network that should be retained. LSTM networks add 3 gates in a recurrent neural network that solve this problem: a forget gate, an input gate, and an output gate. These gates allow us to retain data from the start of the network to the end of the network through the use of something known as cell state. Think of cell state as the memory for our network. The forget gate uses a special type of function known as a sigmoid function to forget certain information. All of the numbers within our network are squished down on this function between 0 and 1. This means that as the numbers approach 0, they become smaller and smaller, thus less and less significant. 0 multiplied by anything is obviously 0, so we can utilize this property to forget certain information or completely get rid of it within our network. Input gates work a little bit differently. Their job is to filter out unimportant values while retaining those that are important. It does this through the use of sigmoid and tanh functions. A tanh function squishes down values between -1 and 1, as opposed to sigmoid functions which squish them down between 0 and 1. The output gate is responsible for carrying out all the information to the next unit of the network. It passes on 2 outputs, a cell state and a hidden state. A cell state, as previously stated, is our cell's overall memory. Our hidden state is something that also exists in RNNs. Think of it as short-term memory or temporary memory. Now that we know what LSTM networks are, we can actually create our model. If you want to see how I created it, including a more detailed explanation on LSTM networks and the actual code behind it, click the link in the description for an article I wrote on this project. After coding this network, what's our conclusion though? Are we destined to be rich Wall Street traders who leverage algorithms like these to become super rich super quick? As much as I wish that was the case, it unfortunately isn't. After thorough testing of the network, it turns out that our network works exactly like it was supposed to. But that's actually the issue here. Our network uses past data to train our model, which means that our new data or our new model is based on past data. This doesn't account for changes in the market or our stock market, like new technologies, new competition, etc. It can't grasp the market as a whole and will therefore be unable to hold the level of accuracy to truly make us as successful as we want to be. We'd have better chances with a financial advisor who can at least make educated guesses on where stock prices may go with analysis of the market. Note that this video is not made as financial advice on how to spend your money. Make educated decisions and learn how the stock market works before making decisions regarding large sums of money. Hopefully, one day in the future, AI will progress enough for all of us to become super rich Wall Street traders.